Ladies and gentlemen, I welcome you all to the H1FY25 post-earnings conference call of Solex Energy Limited. Today on the call from the management we have with us Mr. Chetan Shah, Chairman and Managing Director, Mr. Piyush Chandak, Executive Director, and Mr. Vipul Shah, Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to quickly run us through the investor presentation, followed by the business and performance highlights for the half year that went by, and their growth plans and vision for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Yeah, hello, good afternoon, everyone, and thank you for joining us for this con call, and a very happy New Year to everyone. So those who are the first time for this con call, for the benefit of those who are here. We would like to briefly introduce Solex, where we are coming from, and because we have already introduced Solex before, and so we are one of the oldest RE company in India. It's over 29 years that we are into RE. We started our journey with thermal and then got into the photovoltaic in 2007, and so this is what is our roadmap is since 1995 to 2025. This is our journey. We got listed on in 2018, and then we launched one of our global factory in 2020, and where we are expanding our module manufacturing capacity to 4 gigawatt, and as mentioned earlier, we want to achieve this 4 gigawatt by mid of FY26, that is June 2025. So this is what is our roadmap for the existing capacity. This is our team, where the boards and the people who are day to day engaged into the business and managing all processes. So basically, we are one of the oldest manufacturers, as I mentioned, and then we are one of the leading OEM manufacturer for so many national and international brands. So we work for almost about 22 domestic brands and then 2 international brands. So why we call ourselves as a global factory is, we meet with the requirement of any global demand, and the quality, the process control, everything is so highly calibrated, so that any global, the global leading brands, they find themselves as a suitable factory home for them to manufacture their modules. So currently, we manufacture P-type mono-PERC modules, and then we will commence our N-type production line soon. Due to some shipment issue, there is some the rescheduling our commencement of production, but we are on as per our timeline. And the kind of facility which we have created here is mentioning about the global factory and global standards. We have a in-house reliability test lab. So basically, this is where we have advantage. So these labs basically ensures the reliability of our product, and that's how all the international brands, apart from Solex brand, all other international brands, they find themselves as the most appropriate facility for them, because whatever that product goes out of this facility, they are all meeting with the all international standards, the highest standards. So this is a lab that we have it. Apart from that, the very high level of documentation that we follow, the traceability of module, everything is so high. The standards with the control by MES. So it's basically a unique kind of facility which we have, factory which we have set up, established, keeping in mind the all quality criteria, the process criteria, the control, and obviously the delivery timelines. So I think whatever that we have done in the last 2 years, we have fulfilled all our commitments, including the delivery commitments. We have never failed in our delivery commitments in the quality criteria. So that's how this facility is. When it comes to the product and solutions, yes, we have one of the highest. I mean, recently we introduced TAPI R. So these are the products that we have. We manufacture monofacial, we manufacture bifacial, we manufacture black module for the Europe and US market. So we have a complete full range of product. If you look at the ALLM list, then I think we have a highest number of models listed in ALLM compared to any other competition in the industry. So that shows that what kind of product range that we cater to, and we have delivered in our business. Apart from that, we have EPC solutions. I mean, recently we have introduced a subsidiary of Solex Energy Limited, which is a Solex Green Energy Limited, which is subsidiary for the EPC. So we are into the rooftop business. We are into the street lighting business, and then we are now into the ground mounted solutions also, utility scale projects. So we offer end-to-end solution to our client, and that is the advantage that we have it with Solex. So these are some of the projects that we did. Now, we cater to the multiple sectors. So basically, practically, we cater to all the sectors, industrial and commercial sectors, including the residential sectors also, to fulfill their requirement. So, and these are obviously some of the clients that we work with. And these are very few clients where we have displayed here, but we have a huge range of clients. In fact, where we offered our solutions and the modules also. So now we talk about the way forward, say where we are heading towards. As I said, we are now we will about to commence our production for the N-type modules, N-type TOPCon modules, and that too the very specific the product is TAPI R. TAPI R is a very high-end product, which is made with the rectangular cell design. So rectangular cell design is what normally the solar cells are of square size, 182 by 182 dimension. The product which we have launched is TAPI R, that is G12R, which is 210 by 182. Advantage of this product is a higher output, that is 620. Instead of 585, we will be able to offer 625 watt peak module, which is one of a breakthrough in the industry as far as the Indian manufacturers are concerned. And these products we are launching with guidance and technology updates from one of the leading module brand in the world. So this product we will roll out maybe in the month of June or mid of June or beginning of February. Sorry, mid of January or beginning of February. So this is, and recently, last month in the month of October, we have launched our introduced our Vision 2030, where with all the know-how and all the confidence which is and the trust which is from our client, we are encouraged to declare our roadmap till 2030, where we have declared 15 gigawatt of module manufacturing and 5 gigawatt of cell manufacturing. So 4 gigawatt we will achieve by June 2025, as I said. The remaining, in due course of time, we will set up the facility, new facility, and we'll achieve 15 gigawatt of module. And when it comes to the cell part, yes, cell we are setting a 5 gigawatt. We have already initiated process for 2 gigawatt of cell line, which is 1 plus 1 gigawatt of cell plus 1 gigawatt, 2 gigawatt of cell for N-type TOPCon. And then later on, whatever that new technology comes up, we will introduce those technology also. We are considering the back contact and HJT and everything. So this is what the roadmap for 2030, where we have declared our intention to invest almost about $1 billion in manufacturing. So now these are the key performance highlights, where this is a comparison with H1FY24 and H1FY25. Normally in any solar module industry, H1 are always light and H2 are always heavier because of the monsoon season, and then the kind of the Indian projects that happens, like everybody wants to commission their projects in between January, February, March. So that's how the H2 are always heavy compared to H1. And due to monsoon season, and this time we had extended monsoon, so a lot of projects, like they suffered for their readiness, and the module is the last product where they take a delivery. Although this although we had this situation, we have been able to do the outstanding numbers. In H1FY, we had 930 million income, and this time we have 2,742 million income. So we have shown a growth of 192% compared to the H1F4. EBITDA also, we have shown a growth of 167.7%, compared to the previous first half. EBIT margin also, as you see it on a screen, it is 294% growth compared to the previous half, and PBT 1,194%. So it's almost 12 times higher than the previous half. PAT almost 17 times higher than the previous half, 1,697%, which is higher by compared to the previous half. And PAT margins are also, you can see, previous half was 0.8%, and then this half is 4.8%. So it's a phenomenal growth that as we we were confident to come up with these numbers, and we are sure that H2 will be much better than kind of the order book that we have it, and the production which is happening right now. The H2 will be also quite encouraging for us, and that is in fact showing the confidence in the business and our expansion which is coming up. So these are the comparative numbers that it's on your screen, that first H1FY25, then H2FY24, H1FY24, then these are the comparative numbers that Vinay, would you like to spell out this, or this is just fine?
No, this is fine, I think. If there's anything you want to talk about further about the business, we can focus on that. Otherwise, move to Q&A.
Yeah. So these are the numbers that we have it. So first of all, thank you very much, everyone, for the support and the kind of trust that you have shown in us. And we are quite as one of the oldest company in RE, we are quite matured in business. We can sense the future also, how the market is going, domestic and international both. So our decisions are also quite responsible in terms of way forward. So as you see, the renewable energy in India, which is heading towards, as I said, in a few public forum, I already mentioned that currently the Indian RE target is 500 gigawatt, but India can do even 1 terawatt, which is 1,000 gigawatt also. So recently, Indian government has already initiated discussion to set up target from 500 gigawatt to 750 gigawatt, and I am sure within 2-3 years we will have a target of 1,000 gigawatt RE, where the solar will contribute more than 60%. So we can understand what kind of opportunity that we have it in India, and the way similarly to meet those target, Indian government is also taking a lot of policy changes and the investment in infrastructure, in grid connectivity and everything. They're trying to remove all the bottleneck. So we are quite encouraged to have good numbers coming in from India, and then it's not only India, it's overseas market also that we are targeting. So we are happy that the government is quite proactive in terms of adaptation of renewable energy, and particularly solar. So and one of the major breakthrough initiative is the 35 gigawatt of Khavda project, which is a hybrid solar and wind. That's quite a unique project, and which is the largest single site project in the world. So as I said, India can do it. So yeah, government is anyway, it's a proactive, but it's not basically our manufacturing journey is not dependent only on Indian journey. We are focused on Europe and American market also. We have already exported some numbers to Europe last year and Africa. Once we achieve, we are done with our expansion by June 2025 of 4 gigawatt. We will focus on US market also. US has a huge demand, and then there is always a huge gap between demand and supply. So basically, we have a good opportunity. So we are not worried about the government decisions there in US or India. We do have our business model is such where we do have a relationship with our competitors also, and not only Indian competitors but in international brands as well. So we are quite sailing in a safe boat. Yeah. So the installed solar power capacity has surged. That is what you have seen significantly. And as I said, the India is heading towards 750, setting up new target of 750. So I think there is a huge opportunity which we have in future. So apart from this, because there are a lot of questions which comes like, oh, sorry, these are some of the recognitions that we have from the different organizations for our work, which is a relentless work for 29 years, and this is how. So we qualify for almost all international markets, including the Europe, US, the Britain, Commonwealth countries, and India. So these are the different certifications that we have it, and we are the first Indian company to achieve, achieve the MCA certificate, which is actually required by the Britain and the other Commonwealth countries. So as I said earlier, like in the quality and in terms of process control, the criteria, the control for the product reliability, everything we are at the highest level. So, just to add one more point, there are questions, people have in mind that India is likely to get into the overcapacity, oversupply regime. So basically, I would like to throw some numbers on for the benefit of everyone, so that you can take a correct judgment on whether we are in overcapacity or not. Currently, we have 70 gigawatt of nameplate capacity in India. So we can even if we consider 50% of the production, then we can produce 35 gigawatt of production in India, which is a cumulative all manufacturers put together. So India has, we are likely to achieve 100 gigawatt of nameplate capacity by the March 2025. So, and then India has already committed, huge numbers in terms of cell and modules for by 2030. So this capacity basically, is catered, is not for considering only Indian market, but then US market also, the Europe market also, which is now showing a sign of opening, again, recovery. And obviously India market. India also we have reasons, because why from 500 to 750 and 1000 gigawatt I'm talking, because the Indian consumption has also increased. The electricity consumption, which was earlier 3% on an average, increase by 3%, now which has increased by 9%, which is likely to touch 12% growth year on year when it comes to the electricity consumption. So basically, right now our targets are set considering only our existing demand, not the growing demand. There is a repowering demand. Repowering means those projects operating with the older panels, 230 watt peak, 220 watt peak, 225 watt peak. They are replacing their older panels with the new technology, with the anti-popcorn and then higher efficiency modules. So that's another business that we have it, and it's not only India but it's in Europe also. So that's another opportunity that we have. There are a lot of other opportunity which are opened up. So I'm confident that we are not into the overcapacity regime, and so whatever that India demand is, we will be able to fulfill, and we will be able to justify our installed capacity. Thank you very much.
Sure. Thanks, sir. We'll take the Q&A. We'll take the first
So
question from Agastya Dave.
Am I audible, Vinay?
Yes.
Yes.
Thank you. Thank you very much for the opportunity. Thank you very much, sir, for your presentation and commentary. Sir, I'll start with a couple of requests. So one is that we are a fairly sizable company now in terms of revenues. I would request, sir, you should consider releasing quarterly numbers now. There is substantial seasonality in the business as well. So a quarterly reporting, even if obviously the numbers won't be audited and you don't need to publish the entire P&L in great detail, but at least the revenue, the EBITDA, the PAT, just so that we get a good idea what is happening. 6 months ka gap is just a bit too much, sir. It's too large a gap for a company which is fairly big now, sir. Over 200 crores of half-yearly revenues. So I would really request you to do that. Sir, another request is if you can also start releasing volume numbers because they help us analyze what's the realizations and also on the cost side what exactly is happening. Without volume numbers, it is pretty difficult to really figure out what are the trends in realizations. So now the question, you were talking about that product. Sorry, I forgot the name. Tapri. Uh,
APR.
Tapia. So, sir, you mentioned that the output is better. So I was wondering what kind of realizations can you get per megawatt? Will you be able to charge a premium? And also on the manufacturing side, will it cost a bit more to manufacture that? What are the changes in the cell configuration and the cells themselves that you need to do to make this product? And what percentage of your fully expanded capacity will be able to produce this particular product?
Okay, so fine. When it comes to your suggestion, like quarterly results, so as we have already declared that we are moving to the main board. So anyway, we will have a quarterly results from I think the first quarter of year 2025. So we are already prepared for that, and we will be able to now release our quarterly numbers. Comfortably. I think that should not be a problem. Now, when it comes to the TAPIR, so TAPIR is a new product which is actually invented by the consortium of leading global brands. Majorly are the Chinese brands, obviously, because they are the leaders globally. So, this product is basically the new product and which we have introduced. And basically, we are working with one of a leading international brand. Again, it's a Chinese brand. They are guiding us on a technology front also. So this product, we are quite hopeful, because module dimension is not majorly different. Like it is just taller by 100 and the width is same. Major bottleneck is a width. If the product is too wide, then the Indian developer won't accept it. But here with this product, the width is same compared to our regular modules, and it's just taller by 100 and which generates better output. And because of rectangle character of a cell, it has better strength also, and
Okay.
which is a better sun exposure. So that's how, and now when it comes to the product pricing, there is no much difference. Like it's a very small difference right now, and that also likely to get taken care in next quarter, because the more and more production will happen now with this G12, this dimension cells. So the price won't be any major this thing. The advantage to the developer with this product will be they require to install lesser number of modules per megawatt. So normally you need 1750 modules per megawatt, whereas here you require at around 1450 numbers, 1450 modules per megawatt. So there is a substantial saving of structure, cables, and everything. Apart from that, you require the less land. So currently, like per megawatt, the thumb rule is around 2.75 acre land, where you'll be able to set up this anything between 2.25 to 2.5 acres of land per megawatt. So I think there is a huge saving on the BOS part, BOS and the land part. So these are the advantages that we have it. And Indian market is quite sensitive. So we are hopeful that Indian market will accept it. Our all production lines, upcoming lines are compatible with producing G12R. Even a customer wants M10, which is our standard modules, that also we are ready. Apart from this N-type TOPCon, our production lines are ready for the back contact and HJT also. So like with a minimal upgradation and the plug-in of tools, like we can convert our line to any of the technology. So I think we are quite flexible as far as our manufacturing facilities are concerned. So once we launch this product, we roll out this product, definitely like we are quite confident that Indian developers will go for this product. But though we are keeping ourselves ready for our regular product also. Thank you very much.
Thanks, Agastya. So we'll take the next question from Mr. Udit Sehgal. Udit, you can go ahead, please.
Yeah. Good afternoon, sir, and congratulations for a good set of numbers.
Thank you.
I wanted to know, sir, regarding the 4 gigawatt expansion plan, what stage are we at? Have we placed the order for the lines? What are the source of funds? And how confident are we that we'll be able to start it by the given timelines?
Okay. So when it comes to our plan to achieve our 4 gigawatt of expansion, we have 1.5 gigawatt building is already constructed and ready 2 years back. So in this building we will achieve this 1.5 gigawatt by as I said, like December or January. The remaining 2.5 gigawatt, the building construction is already on, and the line design and everything is done. The commercial negotiations are going on with the vendors for the equipment. So I think by end of December, by mid to end, by 15th, between anything from 15th of December to 30th of December, we will place order for the production lines for the 2.5 gigawatt also. So as I said, we will be able to make the full 4 gigawatt operational by June 2025.
So what is
there are international challenges also. So maybe 1 month, 2 months, it may get extended also, considering the international shipping challenges and all also other things. Currently also we are facing a lot of challenges in terms of shipping of equipment, because these are the large equipments and the availability of vessel and war-like situation, those things are basically affecting our timeline. But I think we are very much pretty sure to make it operational by 4 gigawatt operational by June 2025. Yeah, what was the other question that apart from
what
that?
are the funds required, sir, for this expansion? How do we intend on
expecting the project cost of almost 280 crores, which comprises plant, machinery, and infrastructure. Building and land is not part of this cost, and so almost 210 crores of debt and 70 crores from the equity side. So as Chinmay mentioned, the advance and this money we are having, and we can immediately place the orders for them. And for additional funds, we are in talk of couple of investors. So maybe we have multiple options which we are looking forward. But again, we are planning in such a way that we raise some money for cell line also, so that the plans what we have for the cell line, that is also taken care for. But this for module line, the advances and everything, we have enough funds as of now. From there, we can manage it.
Okay. And one request is there, sir. Suppose, I don't know, once we order the lines, will you be giving a disclosure to the exchanges, or how do we?
Yes, we will.
Certainly.
We will.
Okay, sir. Thanks a lot.
Incidentally, all the vendors are here only in our office only today. So we are, we are at very advanced stage of our finalization of our equipment and the commercials and everything. So I think we will have a disclosure to the exchange also once we are done with this.
Okay. And so once the 1.5 gigawatt line comes online, say we have 700 plus 800, what will be the monthly revenue run rate, say from January or February onwards?
So 1,25,000 modules. So we need to around
No, I mean, you want the numbers from the January onwards, right? So once we are done with the installation of our another 800 megawatt line, correct, Udit?
Correct, sir.
Cumulative numbers on.
So, for financial year 25, we are targeting around. I'll give you the annual terms, or you want monthly terms? Like
Monthly would be more helpful. I mean,
monthly, because in our industry, because of peak and non-peak, I don't think so. But like with this capacity, we'll be able to manufacture 1,25,000 modules per month.
okay.
So 50,000 from the existing line and 75,000 from the new line. So total 1,25,000 module. And if I take approx 5,000.
So basically, what happens, like, because we are at the initial stage of setting up of another 800 megawatt line. So we cannot achieve 100% output from this production line in the first month. So our annual numbers are for this FY25 are
around
800 CR of top line, out of which we are targeting somewhere about 650 CR coming from module and 150 CR coming from EPC. So that is our subsidiary. So we'll have a consolidated results. So 650 CR coming from module and 150 CR coming from the EPC business. So these are the numbers that we will be able to do till March 2025. And from April onwards, because considering the full year for the 1.5 gigawatt and the half year for the other 2.5 gigawatt, we've already, I think, given those numbers.
So I don't think right now you are you want the numbers for 26 and 27, is it?
Yeah, that would be helpful if it's comfortable.
So 26 we are targeting around 24, 2,500, anything between 24, 2,500.
That's with the 1.5 gigawatt operating at full capacity and 2.5 at half capacity. So then
Yes.
once we go to FY27, we'll have the the full 4 gigawatt at full capacity. So then that figure would go further up.
Yeah, yes. So then we are targeting something around 3,400 to 3,600, which will include the modules and EPC business also.
Okay. Where do we see the? Okay, sir. Thank you.
Thanks, Udit. We'll take the next question from Isha Shah. She has some questions. So Isha, you can unmute and go ahead, please.
Thank you for giving me the opportunity, and congratulations on such good set of numbers.
Thank you, Isha.
So I have two questions. My first question is, right now we have I'm assuming we have a greenfield capex. So what would be the asset turnover for that? And I'm assuming what we have 4 to 4.5 gigawatt is going to be a brownfield capex. So what would be the asset turnover from there? That is my first question. And second question, you spoke about also covering the US market. So I wanted to know, after Trump getting elected, how do you see any challenges in the US market, given Trump is more like, Modi, like giving more importance to, production from the own country and not going for outsourcing and something like that. So these are my two questions.
Yeah. So answering your second question first, Isha, basically, when it comes to the supply to the American market, we don't see any major Trump effect. The reason is even the US targets are like currently whatever target they've set for the US to set up the solar power, even if they reduce it to half, then also there is a huge demand supply gap. US doesn't have sufficient manufacturing. There are a couple of factories only operating in US, and which is also again at a very higher price, because the US ecosystem is such where the supply chain is not developed in US. US is a consumer market. So India has a huge opportunity, and considering the Trump and China relationship, like, in past. And so India is the only country who can supply modules to US in numbers, good numbers. So I think the Indian manufacturing will not have a negative effect of a Trump regime. Rather than, I see it as a more positive. Now, when it comes to your first question, which is brownfield and the greenfield projects, yes, 4 gigawatt is a brownfield. And then, I mean, I just failed to understand what exactly the question you wanted to ask.
I basically wanted to understand what would be the asset turnover. So I'm assuming with greenfield capex, the asset turnover could be a little less, and with brownfield capex, it would be a little more. So I'm trying to understand the asset turnover that we would be seeing over here in the greenfield capex and brownfield capex.
So I'll tell you, right now the asset block is 54, around something around 54 crores. Additional, we'll be adding 85 crores for this additional 700, 800 megawatts. And for the 2.5 gigawatt, we have estimated 280. So around overall asset will be 415 to 20 crores, 420 crores you can say. And full year of operation, the turnover will be anything around 3,400, 3,500 crores from the module.
Sorry, how much would be the turnover, you said?
The full year of turnover from the module will be around 3,200 crores.
Okay.
100 plus minus 11.
Okay, so 450 crores of fixed asset block and 3,200 crore of sales. Okay, fine, got it. Thank you. Thank you so much. And happy Diwali and a very happy new year to you all.
Same to you.
Thanks, Isha. We'll take the next question from Pranjal Soni. Pranjal, you can please ask your question.
Thank you for the opportunity. I would like to ask that what are your comments on the recent talks that is into of anti-dumping duty on solar glass imports, which are from China? What will be the possible impact can we expect on our raw material solar glass? Will it affect our cost structure?
Yeah, in fact, any new duty imposed on a raw material, because, we are still like majorly importing raw material. So any additional duty which is imposed on a raw material, that impact our, the cost also. So basically now, last month we had anti-dumping duty on aluminum frame. And India is majorly importing aluminum frame because Indian manufacturers are having a limited supply. And so, there was an impact on a price. Glass will also have a major impact on a price, definitely, if anti-dumping duty is imposed. So right now it is too early to comment on this because the investigation is initiated. Once investigation is done, then the AD authority will recommend to the Ministry of, in case if the AD feels that the anti-dumping duty should be imposed, then they will recommend to the Ministry of Finance. And then putting all the numbers and then, the factual data, the MNRE and the Ministry of Finance will take a decision whether to impose the anti-dumping duty or not. So it's a cycle, like, it's a long cycle. So, but yes, if there is a duty, that will be a upward trend in a pricing. In fact, so we are securing all our orders with the condition that if there is condition of change in law. So all our future orders are having riders like, if there is a change in law, if there is addition of a duty, it will be addressed in a pricing. So this is where like we are securing all our orders. There is an investigation going on for the cell also, solar cells. We have a limited numbers right now, and then the government wants to push solar cell manufacturing in India. Obviously, it will take its own time. So all the investigations are on, but like, let's wait for the results. And then, but yes, as a Solex, we are secured with all our all these type of impacts.
Okay, sir. So my next question is how the company is going to manage the financial needs in order to meet the further expansion as we are expanding more. Is there any proposed thing like?
So basically, it will be mix of debt and equity. both, because we have a good relationship with bankers also, so and the equity market as well. So every time we will have whatever that strategy we will adopt, we will put it in a public domain and we'll let you know, but that is always a mix of debt and equity.
We are in discussion with a couple of investors, to chart out the future expansion of the cell line, more particularly on that. So the discussion
On the fundraise part.
On the fundraise part. So they are still on the initial level. Once we finalize something, I think it will be shared in the public domain.
Thank you.
Thanks, Pranjal. We'll take the next question from Keval Shah. Keval Shah, you can unmute and please go ahead.
Thank you for giving me opportunity. Good afternoon and good set of numbers. I just want to ask, what is our current monthly rate of module manufacturing?
I lost your voice, Keval. Can you just repeat your question?
Yeah, what is the current monthly rate of module manufacturing?
Current monthly rate of module manufacturing means?
The number of modules.
Number of modules we are manufacturing per month. Monthly run rate.
Currently, we manufacture around 50,000 modules per every month. 50.
So by December, if our capacity increase to 1.5 gigawatt, we expect it to double it?
Yeah, so it will be 1,25,000.
1,20,000 by December.
Okay. Again, these numbers are on conservative side. Like we have reached up to 60,000 modules also with the existing line. Similarly, with the new line also. But it should not fall below this. So we are giving the bare minimum numbers.
Okay, understood. Great. Is there what is that portion of export in our current revenue, or it is very negligible?
It is very, because right now the capacity is so limited and it's already booked capacity. So we are not focusing much on export this thing. Once we have this 4 gigawatt, then we will. We do have a clients. I mean, the relationship in Europe and US and all. Last year also US we participated in their road shows and exhibitions. So, and we do have all the certificate ready with us. So there is no point like having a limited capacity focusing on the overseas market right now. And but yeah, next year we will have good numbers coming from the export as well.
So any particular geography apart from US or Germany we are targeting for exports?
So these are the major markets that where there is a demand, and then these are the market where the India has a opportunity to supply modules. Otherwise, when it comes to the Middle East or Southeast Asia, that demand is less, but and then there is a Chinese penetration. So these are the two market where there is a size and obviously opportunity for the Indian manufacturers. So we are focusing majorly on these two segments.
Okay. So are we any companies planning to set up any manufacturing facility in US, or it will be only from the India?
Not at present.
Okay. So last question, I just missed. When we are planning to list on the main board?
Sorry.
The process is already on. So maybe January. I think we will be on main board.
Okay. Thank you. All the best.
We comply with all the norms. We are on the process. Any delay because of the from the exchange side. Otherwise, we are complying all the norms. So considering some margins, I think so. Jan comfortably we should be on main board.
Okay. Thank you. All the best for the future.
Thank you.
Thanks, Keval. We'll take 3 questions from the chat from Manish S. He's asking when this new expansion or expanded capacity will reflect in revenues for the company. Kindly state from which month this expanded capacity will add on to the revenue of the company, and also kindly share the expected EPC share of revenue for FY25.
So like 1.5 gigawatts. So the second line, what we are adding, we plan that it should start contributing from in January month, Jan Feb, like Feb first week or Jan end. And the 2.5 gigawatt installation will start. We are targeting it June, but being conservative sides, we have considered only 6 months revenue for the 2.5 gigawatt.
Okay, so basically, as we said, like FY25, we are targeting somewhere about 800 CR. So out of 800 CR, 150 will come from EPC and 650 will come from the module. And FY26, like the whole 1.5 gigawatt will have a full financial year, and 6 months for the another 2.5 gigawatt. So this is what the breakup is.
Okay, so here's one more question. He said on company's website shows company also is into solar charging stations. My question is company planning to expand its business to solar charging business also in a big way?
No. We are EPC company, so we can build solar charging stations and we can transfer it to the client. So we are not having any plan to get into the business of solar charging stations right now. The EV charging stations. The portfolio which you have seen, that is a EPC portfolio. So it shows our capability to build the utility scale ground mounted solar power plants, the large scale power plant, to the smallest, which is a street light. So this is a complete entire basket, that we have displayed. So that shows our capability to cater to the different market, different solutions. So the solar charging station is one of the solutions which we can provide to our client.
Thank you, sir. We'll take the next question from Karan Sanwal. Karan, you can go ahead, please.
Hello, I hope I am audible.
Yes, you're audible.
Yeah, thanks for the opportunity and thanks for the detailed explanation, Chetan sir. I have a couple of questions, like what was the mix of OEM revenue and own Solex brand revenue for H1FY25?
I'm sorry, just can you, which financial you were saying?
H1FY25.
FY
First
H1.
half.
Okay. So basically, I mean, earlier the ratio was 70% previous half. I mean, I'm talking about the H224. And that at that time the ratio was 70-30. That is 70% was contract manufacturing, other brands, and the 30% was Solex brand. H125, the ratio has improved, and like it's almost about 50% Solex, 50% OEM. And H2, we will have almost about 80% Solex and 20% OEM.
And would this ratio be similar for the coming years, FY25, 6?
So, this basically, OEM is one of the major strength. So we would always focus on contract manufacturing, which is actually helping us in terms of consistency in top line, bottom line, and then which is actually preventing us from the risk of price fluctuation for the solar cell. And the number thing is, like we get always updated with the technology, because since we work with the leading brands, like they have a advantage of new technology and the know-how on the process and everything. So that's something which is one of our major strengths. We are very unique that way in terms of compared to any other Indian module manufacturer, those who are larger than us and those who are smaller than us. So Solex has a very unique, kind of strength that we have. So we would like to always encase on that, and at any point of time, it will be anything from the 60-40 or 50-50 kind of ratio between Solex and OEM.
Oh, okay. And what was the contribution of, sorry.
The second half year, the ratio changes, like the current date is 80 Solex, 20 OEM. So similarly, next year also you can see the same pattern. So the second half, since the demand is more, and so the ratio will again, but the ultimate objective is to utilize the production capacity to the fullest level.
Agree. So also, what was the contribution from EPC for this half?
Well, Karan, can you just become a little louder, please?
What was the contribution of EPC contracts for H1FY25?
FY25. So as I said, out of 800 CR, 150 will come from EPC and 650 will come from module.
No, I'm talking about the currently recorded revenue, H1FY25.
Around 32 crore. 32 crore is from PC, and the remaining 240 is from module.
Okay. One last question. If you could highlight what kind of margins can we make on this projection that we have shared for this year as well as the next 2 years?
As we said, we are targeting the EBITDA of like last quarter when we last half year when we had, we said we are targeting the 9% of EBITDA, and this half year we could easily achieve this. So anyways, between 9 to 11. So every year you will see some improvement. So it will vary between 9 to 11, comfortably between 9 to 11.
And any PAT margins target?
At margin around 5%.
Okay, great. Thank you so much for your detailed answers and all the very best.
Thank you, Karan.
Thanks, Karan. We'll take the next question from Aman Madricha. Aman, you can go ahead, please.
Yeah, I said congratulations, Team Solex, for an amazing set of numbers. So, first question which I have is that over the next 2 years, as we are expanding our total capacity to 4 gigawatt, so what would be the peak level of debt on our balance sheet, let's say 2 years down the line, or let's say by the end of FY26?
So like, out of 280 crores, 25% margin to 70%, 210 crores, plus existing 60, and the EC term loan of, I think, so what's the outstanding term loan? 26. So 210, 60, 26. So term debt of around 300 crores.
Term debt of around 300 crores. And sir, if you would also highlight that, let's say, for example, in FY26, if we are targeting a revenue of, let's say, 1300 to 1400 crores, so what kind of working capital limits would we would require?
Like, we generally keep a cycle of 2 months working capital cycle, and of course it is again supported by the creditors. We get a lot of international and domestic credit also, plus we get advances from our customers also.
So, net we can say, let's say, for achieving a turnover of 1300 1400 crores, we could require a 200 250 crores of working capital, right?
45 days we are keeping a target to reach a working capital cycle of 45 days.
Okay, perfect. And also, Chetan bhai, I had a question particularly. Let's say, for example, I was reading one article. Now everyone is transforming towards the TOPCon technology for the cell thing. So there was some test result that was showing that the TOPCon technology is more vulnerable than the monopod technology. So would you highlight on this?
Yeah, basically, any new technology needs to be tested in a different market, different climatic condition. What happens, like, when there is a new technology, typically it is tested in a colder climate. In China, the 30 degrees is the highest. In US, 30 degrees is the highest. In Europe, 30 degrees is highest. For us, the 30 degrees is the starting, and it reaches up to 55 degrees. So every climate, every product, every technology behaves differently in a different climatic condition. So when it comes to the initial phase of N-type TOPCon, yes, there was a issue. There were reports. I have also seen those reports, like from the labs, reputed labs, that it is more vulnerable when it comes to the degradation and the UV ultraviolet effect and everything. So India is a higher. That's the reason Indian developers were quite like conservative in adopting N-type TOPCon technology for their projects, and that's how the monopod modules are still in demand. Now there is a lot of improvement which has happened in N-type TOPCon technology for the Indian climatic conditions. So I think by the beginning of 25, we will have a better product quality when it comes to the N-type TOPCon, better product for the Indian climatic condition. So there is always a scope of improvement. Even the P-type also took a lot of time to get established in India. Once it is established, it sustained for a long period. So the behavior of Indian customers are very very conservative, and that's how they always go by the test results, and that's a good part, in fact.
So to follow up on this thing, let's say for example, if there's a lot of, let's say, cell expansion coming in India, so the major of the cell expansion is coming through the top one technology only, right? For
Yeah,
time being.
because there will be a scarcity for the wafer, availability of wafer for the P-type. So, I mean, we have to go for the N-type top one technology, and the cell capacity is also getting added with the N-type top one. So there is a constant improvement which has happened, and so this same will be available for the Indian cell manufacturer.
Okay, so all I just wanted to understand is, let's say, for example, if we as a company decides to set up a, let's say, a cell line to a top one thing over the next 2 to 3 or 4 years, so the technology will still stay relevant, right, over
Yes.
the course of the period.
So we are always, as a Solex, we always keep a track with advanced technology, what is happening internationally. So 5 years down the line, what is going to happen and how the technology will become a commercial, because there are technology already developed at the lab level, but I mean, making it commercially viable is something which is a different challenge. So we always keep a track of the technology which is becoming commercially viable, and we expand accordingly. So at present, like as I said, like N-type token, by the time we start our cell manufacturing with the N-type technology, there will be a lot of improvement in terms of the quality, in terms of the UV resistance, in terms of efficiency. So that will have advantage for our cell manufacturing. And
So
then as we have
globally, sorry.
as we have declared 5 gigawatt of our cell manufacturing, we are going only for the 1+1 and for the N-type. The remaining we have not decided as, because we know once we take up this another 3 gigawatt, there will be a change in a shift in a technology. So we'll adopt those technologies. So that's how, like, we always mitigate a risk of technology change in our investment.
And sir, I just wanted to answer to a very basic question. Let's say, for example, let's say we are setting up an additional after this thing 800 megawatt line, let's say if we are setting up a 2.5 gigawatt line, so we are setting up that module line. So that module line is fungible. Let's say if I'm setting up a monopark line, that can be used in a top one line also for the module thing, or it's different totally.
No, so basically, these production lines are capable, even the current production line is capable to produce N-type TOPCon. We have already produced N-type TOPCon, that was with the 10 busbar technology. Now the technology has changed to 16 busbar. So with the little upgradation, we can convert our production line to the N-type TOPCon 16 busbar technology. Current, even the upcoming line 800 megawatt and the 2.5 gigawatt lines are designed in such a way that where we can produce back contact and HJT and anything which comes in.
Understood.
I mean, there are little upgradation which require in some of the few of our key equipment, but we don't have to replace the whole production line for the new tech.
Okay. And sir, also just last one question, like given that there were talks of that ALCM coming in, so what is your perspective? Because given that let's say for the total cell infrastructure in India, we are at, correct me if I'm wrong, we are at 10 gigawatt or so in the terms of capacity. So how is the cell infrastructure panning out in India, if you may highlight?
See, like a cell normally takes little bit more time. It is anything from, I mean, on an average, it is 20 months to 24 months. Any cell line from 0 day to commencement of a production. So India needs time. ALCM is a good, which is needed. Like ALLM, government, they introduced in 2019 and they imposed in 2024. The reason is government wanted capacity to happen. So once we had a 40 gigawatt of capacity registered in ALLM, government imposed that and made it mandatory. So likewise, cell also, like, government is putting pressure on every manufacturer, encouraging every manufacturer to set up a cell line. Once we have a sufficient capacity, ALCM will be in place. So basically, ALCM, declaration of ALCM is the intention of a government to impose, as early as possible, so that all the investment can happen fast and then cell manufacturing activity starts happening in India. So we are in a constant touch with the MNRE and we are taking, like, we are helping them to take sensitive and effective decision, so that the Indian solar journey doesn't have an adverse effect. At the same time, Indian manufacturing also gets promoted.
Understood. Thank you so much, sir. Thank you. That was very helpful.
Thank you, Aman. We'll take the next question from Mohit Arora. Mohit, you can go ahead, please.
Sir, I want to understand that the EBITDA margin as compared to your peers are very lesser.
Mohit, can you be a little louder, please, Mohit?
Yeah, can you hear me now, sir?
Yeah.
So, sir, your EBITDA margins as compared to your peers are little lesser. And we understand the fact that you also do the OEMs where the risk and the margins are little lesser. So apart from this, is there any reason for your lesser operating margins?
Like, competitors, I don't know whom we are comparing with. We are not being able to comment on what others are doing. But looking at the industry, what others, like other unlisted players are also there, they're doing good. So based on that, I think so EBITDA margin on 9 to 11 is an sufficient, is a good number for the industry.
Yes, sir. And can you please explain the difference between the nameplate capacity and the real production capacity?
Okay, so nameplate capacity is derived the one production line, the production line which is installed, what is the highest efficiency of module it can produce, and the how many numbers of modules which can produce, without considering the breakdown period and changeover period and everything. So that is a nameplate capacity. So, for example, the nameplate capacity of our production, current products, like, as I said, 27 seconds per module, which is our nameplate capacity. And whereas the actual capacity is lesser because of the breakdown of equipment, or the raw material replenishment of raw material in the equipment, feeding of raw material in the equipment. Those breakdown, in fact, if we calculate, then it goes down. So there is always a difference between the nameplate and the actual capacity. Before 2019, the Indian nameplate, there was a gap between Indian nameplate capacity, huge gap, and the actual realized, which has improved. So right now, whatever that nameplate capacity we have, we can go up to 70-75% realization of that capacity, which was earlier below 50% before 2019. But then, it all depends upon the efficiency of a module manufacturer and the consistency of a manufacturing plan and the raw material plan. So there are very few companies, like, in India, they can achieve 70 plus. But I mean, on an average, the other players are anything from 55% to 65%.
Like, to give more clarity, like what Chetan mentioned, like the plant is capable of manufacturing 750 watt peak panels, but the prevailing panel is, I think so, is
550.
550.
So yeah, I mean, what Vipulbhai is trying to say is our nameplate capacity is derived as we can produce 750 watt peak modules. Now, that is how the megawatt and gigawatt comes in. But when the market demand is 550 watt peak, so if you multiply this 550 with the number of modules remain same for 750 and 550 also. But since the market demand is 550, not demand for 750, the megawatt, it reduces, and that is how the nameplate and the actual realized capacity differs.
This applies for all the players, not only for Solex, the nameplate capacity and the actual capacity. So the capacity is what people speak, or the companies speak, is based on the maximum efficiency modules what they can manufacture.
For example, giving one additional example, Mohit, on this, like, our current production line is 27 capable to produce module with every 27 seconds. The Lunite 800 megawatt line, which is coming in, which has a capacity to produce module every 23 seconds. And the 2.5 gigawatt, the line, the way we have designed is, like, it will be anything from around 14 to 16 seconds. So that is what this capacity is. So we are constantly working on the technology front. We are constantly working on the speed and efficiency of a production line. we are incorporating a lot of technology, artificial intelligence, the machine learning, a lot of things on our upcoming production line, and upgrading our existing lines also. That will actually help us to improvise on our reduce the gap between nameplate and the realized capacity. Thank you. Thank you, Mohit.
Sure, sir. And the last question from my side. Sir, we have already explained this, but I want to understand a little further. Sir, US is also expanding its manufacturing capacity, and they have already achieved 31 gigawatt of the production capacity. So, and their requirement is around 50 gigawatt. So, isn't it US moving towards self-sufficiency in module manufacturing?
No, so basically, see, there is a difference between announcement and the actual installed facilities. So US demand is, the actual demand is 50 gigawatt. Now, if you want to fulfill the 50 gigawatt of US demand, then you have to, on an average, you need 100 gigawatt of capacity, nameplate capacity installed. US currently hardly they have around 10 to 12 gigawatt installed capacity, which is like the operational right now in USA, and that is an nameplate capacity, out of which again the production output is. See, US is a challenge again because there is no raw material which is manufactured in USA, so they have to import raw material from Southeast Asian countries only. So there is a huge cost and the time. Apart from that, the US manufacturing cost is much higher. So as earlier I said, like India will always have an advantage, and India will always, other than US manufacturer, India will be the very strategic supplier for the US demands. So the logistic is also big challenging, like East Coast, West Coast. Like if you have a facility in the East Coast, then if you cannot, it is very difficult to service your West Coast customers because the transporting modules by road or by train is very expensive, and there is no coastal route to transport the module in US. So India will always have advantage in a long term over compared to the US domestic manufacturing. US domestic manufacturing happens only can happen and sustain on a support which is offered by government, whereas the India is a self-sustaining model. So I think India has a long game plan for US.
Thanks a lot. Conditions for the coming quarters.
Thanks, Mohit. We'll take one last question for the day from Pranjal Soni. Pranjal, you can please go ahead.
Yes. Could you please highlight heavy and major variance in cost in terms of percentage as the company is transitioning from current technology of P-type monocoque to N-type? Will it majorly affect the cost structure?
Cost structure of what?
The costing wise, like monocoque P-type, right?
Yes.
N-type.
Yes.
Also,
Yes.
basically, the cost is now typically what happens wherever initial stage that there is always a cost difference between any two technology. So earlier there was a cost difference between P-type and N-type. Now because the N-type demand is growing, the N-type cost is also coming down, and P-type is phasing out slowly. So basically, I don't see a major cost difference, or rather it is practically, it is the same, almost same cost where the P-type and N-type is available. So for developer also, for manufacturing also, we don't have any major mistake.
Okay, sir. Okay.
Thank you.
We'll take one last question from the chat from Mr. Devansh Doshi. Recently, we've observed major Indian players establishing solar PV manufacturing units in the US. Are we looking at similar initiatives or plans?
As I said, like we are comfortable manufacturing right now at present in India and supplying to USA. Once we find any good opportunity, long-term sustainable, because see, my focus is always on a OPEX part of a setup. So whatever that investment they do, it should be sustainable for long term in terms of OPEX. Incentives are temporary, like it may remain. Stay or it may go also. So even like what happened previously, like, during the Obama administration, they offered incentive to manufacturers to set up their facility in USA, and so then the Trump came in, and then all the incentives were withdrawn, and then all factories suffered badly. All the investment also suffered badly. Now then later on Biden came, and then Biden again offered on the later part of his tenure, they offered the incentives for the manufacturing in USA for 10 years. Then again now there is a change of guard which is going to take place, and then who knows what the Trump administration will take a stand on supporting domestic manufacturing. So US is basically like inconsistent in terms of the investment in manufacturing there. So I find a little bit safer when it comes to the investment, more investment in India, building up a more capacity, manufacturing capacity in India, and catering to the international market. But yes, of course, we are not turning down the opportunity in case if there is arises. We will come back and we'll share with you in future if there is opportunity.
Like in fact, to add, when the US government had announced, so Solex had also done detailed study. We had visited US. We has figured down 3-4 states. We had done the all subsidy planning, OPEX, CAPEX, all the planning was done, but we did not find it worth doing it. So now again, whenever the future opportunities come, Solex is very much well equipped to seize the opportunity, and if needed, we can also start manufacturing in US. But seeing the change in the policies, we have to be very cautious, because investing huge and then we are at the mercy of the subsidies, and then it can be a challenge. So we'll be keeping a close eye on the policies and the development in US, and accordingly we'll plan our strategies for US market.
Sure. So since that was the last question for the day, would you like to give any closing comment before we end this call?
Okay, so basically, first of all, thank you very much for your questions, and then I mean, we are very happy that you are all like well-wisher of Solex, and then you are keeping an eye of all our move and numbers and everything. And so basically, as we said, like we have a very aggressive expansion plan. And this expansion is just not because of the market trend the others are doing, and that's the reason we are doing it like that. We have established our base very strong in last 2 years, and we have built up our reputation internationally as a focus and a very professional manufacturer, not only for Solex brand but the other brands also. So this is very sustainable model that we have built. And so any ups and downs like in industry or any pricing or the geographic challenges, we are much in a safer hand because of our business model. So with this background, we are expanding. We have announced our expansion plan and roadmap till 2030, and we would like to focus and remain as a manufacturer in a longer run. The opportunities are always there, but we are very conservative in terms of taking our steps. We always prefer to start with the baby steps and then the jump, and this is how the Solex is. And so I'm sure that similar kind of support that and we will get from the investors also, and the customers also. So thank you very much for being with us and spending time, your valuable time with us.
Thank you, sir. Thank you to the management team and all the participants for joining on this call. This brings us to the end of today's conference call. You may all disconnect now. Thank you, sir.